Hey folks, Dan Frio here, the rate update. TGIF, it is February 26, 2021. We have a recovery. Now people are going to say, oh Dan, you plan this. Guys, I can't plan this. I don't control the bond market. You're going to like what happened to rates today though. Don't go away. We'll be right back. Okay, so I have somebody busting me down below saying, oh yeah, he's just spear-mongering and so forth. Guys, I'm just giving you the facts. I don't control the markets. I don't control the stock market. I don't control the bond market. I'm just telling you what's going on. So let's get on to it. I'm excited. You might have the door just opened a little bit. So if you didn't refinance or check in on it or thought you missed the boat, guys, jump on now. And I'm not going to fear monger or whatever. I'm just telling you the facts of what's going on. So if you do it, great. If you don't do it, it's on you. So let's go to where everything's going right now. MBSs have recovered sharply. Why? I don't know. To be honest with you, I don't know. I think it finally, and I said, guys, this is an overcorrection. We've dumped too far down. If you go back to my video yesterday, I said we should be back basically right in this range right here. Give us a couple days or a week to get there. We're getting there quicker than I thought, maybe. So I'll give you the intraday chart on what's going on, but this is exciting news, guys. Let me just explain to you what's going on in the market for those kind of newbies out there. What we follow here on this channel, hopefully you follow me all day in the mornings with the market opening with Dan Frio, and then later in the day, what's going on with mortgages. So if you're in the real estate world, you're an investor, you're a realtor, you're a mortgage person, you're a banker, you're a wealth advisor, anything of that sort, watch the channel. It's 10 minutes of your time. I think you'll learn a lot. But right here, what we monitor on this, we don't really monitor the 10-year Treasury because it is not a direct factor involved in mortgage rates. The mortgage-backed securities market is. However, the 10-year Treasury plays a big role in the economy and stocks and bonds in general and so forth. I'll go over that in a minute. But what happens here is this price. So this is what's reflective of the price. What happened today with the price of a mortgage-backed security bond? Well, the price went up. So when the price goes up, and it's up huge, it's up 108, that's a big move. The price goes up, mortgage rates go down, okay? From here to here, we've seen a 1% adjustment to rates, 1%. The news will catch up with me over the weekend or Monday saying, oh my goodness, rates are up. You might see some trickles of it today, but most of the time the news agencies and a lot of the print ads they focus on Monday, Tuesday, Wednesday. They don't focus on Thursday, Friday. So you might see contrasting information that I'm providing. Guys, we are live right now, 3:50 p.m. Central Standard Time. So this is what's going on. We love it. Basically, we had a bloodbath. It's like the stock market crashing, and then all of a sudden people are like, okay, I like where we're at now. I'll jump in and start buying. We're seeing that right now in the mortgage-backed securities market. Also, I always say, if you watch my channel in the mornings, the morning update with Dan Frio, I said 1.4 on the 10-year Treasury is going to cause mortgage rates to go up and the stock market to go way down. And we had that in the last week or two. We went from here to here, there, and you can check the numbers for the stock market is down for its second consecutive week. So that's what's going on with all of this stuff. Let me show you the intraday trading. So we are up 111 right now. You'll probably see that move as we go through because the market's open for another 9 minutes. But look at the day. We came out of the gate and we came out of the gate and we rallied. And then we're going through, and then we just crashed. And this was very concerning. Okay, very concerning. Red means there's more sellers than buyers. Green means there's more buyers. And when you have a green candlestick that goes up this much, you have an excessive amount of people jumping in, buying the market. So right here, it was bad. And if you talk to me right then and there, right around 10:15, I'd be like, lock them, move on, and you're going to miss the boat. Then all of a sudden it turned. And then from there on, we had excessive buying all the way through right until 4:15 or 3:15, right until just about a half hour ago. And then buyers stepped back in. This is a nice move for today. So if this was a stock price, you'd be like, I love it. So kind of the same thing with this market right here. So as this goes up, it means mortgage rates come down. This is a huge move. Economic calendar today, it's nothing that shocked the system. Consumer consumption or personal consumption, it's up. So people are spending more, and it basically, each one of these triggers down a little bit more micro in what it's looking at. Personal spending and all the other stuff here. Let me scroll down here because there's trade balance, personal income. Let's see what's going on there. It's up a little bit. Personal spending, it's right in line. So nothing there to shock the market, and nothing really to make us go up 109. Nothing other than technicals, and we bottomed out. So I don't see us going back revisiting these unless, I mean, we got things going on. We got war starting up again. It was kind of nice not to have war for several years, but now we're bombing Syria and other things. So when all that stuff happens, there's hiccups in the system. But usually, I hate to say it, war is scary times for stuff, and it usually brings mortgage rates down. So I'm not a proponent of war. But it helps mortgage rates, I hate to say it, in a roundabout way. So that's what's going on with the technicals there. Mortgage news right now is forbearance. I have a detailed forbearance video coming out next week to help hopefully hundreds of thousands of people in their quest to get out of the forbearance program. So that is great news, and I'll have very, very detailed information next week on that. Let's see what's going on in the stock market. It's collapsing continually. So I'm looking at this is, if you follow my channel in the morning, the morning update with Dan Frio, I'm waiting for this to kind of bottom out, and I see a bottom to go back in and start buying. Why? Well, the economy is we're in a pandemic. Half the country's shut down. Well, if we're on a recovery and we know everything's going to get better, we have vaccines, we have stimulus, we have everything going in the right direction, the market's got to move up. Gotta. I mean, it's just there. So if you're an investor, pick your timing to dollar cost average and get involved. I'm not telling you what to do, but I'm just saying my opinion is I would take this as a buy signal there. Yahoo Finance, let's go see if anything's stock seesaw, bond yields. You're going to see all this stuff about bond yields. Again, a lot of this detail is in reflecting what the news was up until probably Wednesday. Maybe teetering Thursday morning, because when they do their research, it takes them about a day to get everything in, fact-checked, and published. So some of this data is going to be a day old, so it's not going to reflect these fantastic numbers that we're seeing here. So the last and not least, guys, we might just stabilize here. This might be a door that opened and said, if you miss this window, we're going to give you another couple days to do something. I don't know. But, I always say pigs get fat, hogs get slaughtered. I'm getting hundreds of phone calls, people with 4 to 4.875 in rates. Guys, pull your head out of the sand and call us. If you're in forbearance, call. If you're building a house and you're like, I'm not going to close until July and my builder won't allow me to lock, call. We'll give you advice. Some people we can help. The majority of people, hopefully, we can help. There's some people we won't be able to help. I'm not going to dwell on the negatives because there's millions of people we help every year. So that's that part of it. If you're looking to refinance, you haven't started, you're just like, I don't think I qualify or whatever, please call. Call, email, do whatever you need to do. So how's the best way to reach me? But last but not least, please give me a thumbs up. That's all I ask you to do. 3 things. Thumbs up, subscribe, click the bell. You do those things, I'm happy, and I'll keep posting on a daily basis. So now let's get on to how you get a hold of me. Go to therateupdate.com, therateupdate.com. Scroll to the bottom, this is my phone number, 844-775-LOAN, 844-775-5626. Goes to the same place. Email me, dfrio. My name is Dan Frio, so it's dfrio at preferredrate.com. If you want to reach out to us just on the web, you're like, I don't like talking to people, fine. Hit the apply now button if you want to apply. If you're questioning some things like, what programs would I fit into? What's available to me? Go down, click here if you're looking to buy. This will give you probably about 12 or 16 questions. Based on your answers, helps me determine what kind of program to put you into. This one here is for the refinance. Okay, this is if you want to talk or email to us, you just click it and you'll get assigned me or one of my loan advisors, and we'll get in touch with you either via phone, text, or email, whatever you choose. And that is it in a nutshell. So guys, have a blessed, fantastic, awesome Friday and weekend, and God willing, I'll see you back here on Monday. Take care. See you then. Bye-bye.